All right, guys and gals, it's about that time of day again here, folks. Time to get back to work. Wednesday evening, January 22nd, 2020. And my name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because I help traders find the best of the best trade setups using a very simple 3-step strategy that we teach and trade together every morning in our trade room. But my job is a little bit different tonight. Tonight, my job is extremely important because tonight we're identifying the best levels of support and resistance for tomorrow, the best entry setups I'm watching for tomorrow, and most importantly, how can I forget, the biggest traps to avoid tomorrow. That will be Thursday's trading session. And we get a ton to cover in tonight's video. Get the charts all prepped up in the background. As you can see, we get some crude oil, some S&P, some Nasdaq, some gold. We'll talk about those charts in great detail here tonight on the video. We'll also grab the calendar. We get some big news tomorrow morning. Everybody in Asia and Europe, big news in the overnight session tomorrow. We get some big news on the schedule. We also have some known unknowns we're watching for tomorrow as well. I want to make sure you know when the best and worst times will be to be trading tomorrow. We'll grab a look at the calendar. But before we jump into the video tonight, though, as always, I want to remind you, if you're here for the first time today, make sure you subscribe to our YouTube channel. That way you never miss another great newsletter video. And don't forget, if you have any questions, drop those questions right in the comment section below. I'm always hanging out in those comments. So if you have any ideas for new videos you want to see me cover, any topics you want me to cover, or any questions about anything we talk about in tonight's video, drop those questions in the comment section below. And while you're down there, give me a thumbs up tonight on the video. If you tune in every evening, it means a lot to me that you guys spend your time with me every evening on this video newsletter. So thumbs up if you tune in every evening and join us here on the newsletter. Don't forget to subscribe while you're down there. Let's jump into the video here for tonight. I'm going to grab the calendar here first. Let's take a look at what's going on here for tomorrow's trading session. Jumping into the economic news calendar, courtesy of econoday.com. What do we have here on the schedule for tomorrow? Well, first of all, we know we've got 2 known news events for tomorrow. We've got the jobless claims at 8:30 and the petroleum status report at 11 o'clock Eastern time. Now, to be honest with you, jobless claims have not been a very big market moving event for a very, very long time, so I would not worry too much about jobless claims tomorrow morning. I would, though, be aware tomorrow, 11 o'clock Eastern time, we do have that what is normally on a Wednesday morning, right? But since Monday was a holiday, that of course is pushed back to Thursday at 11 o'clock Eastern time. Now, this is great if you're an oil trader like we are in our trade room, because that means we get a full session tomorrow, almost a full session, right? We trade every morning in the trade room from 8 o'clock to about 11:15, 11:30. So we will lose a little bit towards the end of the morning session tomorrow. So that definitely means make sure you get to your desk early, especially if you're trading oil with that news report at 11 o'clock tomorrow morning. Now, there's also one more thing here. Now, I haven't heard a lot of people talk about this, but according to the ECB website right now, tomorrow is an ECB announcement. I've heard back and forth on this. I believe they are still scheduled for that ECB announcement tomorrow morning. I just checked on their website this weekend and, of course, this afternoon. They're still showing the announcement tomorrow morning, January 23rd, for the ECB. It's really important you understand. It'll probably be around 7:45. You'll get the announcement. But remember, it's just like the FOMC announcement here in the U.S., where there's the announcement and then they walk over to the podium and then they have that hour-and-a-half long press conference. In my experience, you really got to be careful on gold and euro. And I would also probably say the pound or any other currencies that are wrapped up in the EU right now. But usually this will be pretty messy, right? Again, I haven't heard a lot of talk about it this week, but there's also been a lot of distractions. This coronavirus kind of taken the front stage here. Trade with the EU has taken kind of center stage here. So I'm not sure what, I would assume the website is correct. I haven't heard a lot of pundits or talking heads talking about it in the media this week, but we should see tomorrow morning the ECB announcement at 7:45. And then as always, 8:15, 8:30, they'll get the press conference going. And that's usually going to last until about 9:30. Now, what that means to me tomorrow is I got to be careful on markets like euro and gold. I always have to be careful around the ECB announcements, right? It's kind of the same thing for the FOMC. They're talking about interest rates. They're talking about monetary policy. So gold is definitely going to be probably the most difficult of the markets. in the early half of the session. And gold, right? I'm not a big fan of gold after 10 o'clock, 10:15. So gold's going to be a little bit touch and go for tomorrow. I'll do my best tonight to give us a good roadmap, and we'll see if we can get some quality price action, right, in and around that ECB announcement, right? I'm not going to hold my breath, but obviously I'm an optimist at heart, so I come in every morning. I've always got an optimistic, a positive view. I wait patiently and see what we can get tomorrow. But be aware, that ECB announcement should be coming out 7:45, and then again, right, be aware, gold and euro until about 9:30, 9:45 tomorrow. Should be pretty choppy. I'll do my best tonight to give you guys an idea of how to trade it on the chart. So that covers all the news tomorrow. How about some known unknowns right now? Some known unknowns. Well, at this point, you probably have heard about this coronavirus. I talked about this last night. I've seen this come and go a lot of times in my career. These viruses, they pop up. I got to be honest, the fact that we came in this morning and the news media said, oh yeah, no problem, we got this baby in the bag, right? We got it quarantined. That's not the truth, right? So it seems to me like there may have been a false flag today, right? We saw the markets shoot up today in the pre-market. Apparently that was on the euphoria of having it contained. That's how ridiculous these markets are right now, apparently. But all kidding aside, though, I think they showed their cards early this morning, right? I think the markets are calling their bluff right now. And, I don't want to be a doomsday person at all, but the way that they promoted this being under control early today makes me think there might be more coming in the next couple days. That might be the story of the week here as we see. Think about it right now. If people get spooked with air travel, you've got crude oil, you get all the major airlines. They're huge stocks, the Nasdaq and the S&P. This could drag a lot of these markets, right, going lower. So we definitely have some, again, I'm not much of a doomsdayer, but this could be starting to snowball here as we get into the Thursday and Friday trading sessions. As of right now, it just looks like these markets are disagreeing with what they said earlier. I have a gut instinct right now, and of course we'll have to make sure the patterns, are tradable with it, but it feels like to me they bluffed it a little bit early, and it looks like markets are starting now to realize, right, it might not be as contained as they originally thought. We also have the EU and trade right now. Now, I know we're barely recovering from the US and China trade talks, but you got to remember right now, in the EU, you got Brexit coming, right? End of the month. They passed, I believe they passed the UK Parliament today. The Brexit deal passed today in the UK Parliament. It heads up to the Queen next. We've got countries like Germany teetering on a recession right now, technical recession, right? You've got the Italians, right? Their leader just stepped down ahead of elections, and we've got this trade deal coming in now. I mentioned this earlier on in the week. We don't see this very much right now, but that's definitely coming down the road as well. So that's another known unknown I'm really keeping track of very closely right now. So a lot going on here between news tomorrow, right? ECB tomorrow, and again, how will this coronavirus, will it keep snowballing? Will it lead to a big bear run lower? And when will we hear more about this EU trade deal? The U.S. President Trump likes to play hardball. They had a truce today with France with a digital tax. This is going to be interesting to see how this plays out, and the markets are going to be fun to trade because of it. Now, as always, right, don't forget, we're going to do this together tomorrow morning, every morning, Monday through Friday, 8 o'clock Eastern Time in our trade room. Don't do it alone tomorrow. Come out and join me 8 o'clock Eastern Time, and we'll do it together. So now you know what's on my radar here for tomorrow. Let's grab a look at the charts right now. We got a lot to cover here. Got some oil, some S&P, some Nasdaq, and some gold. I'm going to jump in here now first to the oil market, and let's take a look at what we know about oil and what we don't know about oil. So what do we know on crude right now? We know the market, first of all, is bearish. Big bear rundown, and anytime we have a bear market, we know we want to sell, right? Where do we sell? We sell at resistance. Now, what else do we know about this bear market right now? We also know it's 1, 2, 3, 4 legs. That's 4 legs down. You can see just how insane, right, how heavy this market is right now. And this, to me, today was really the biggest clue right out the gate. It kept on falling to new lows, and that was, to me, at least something that told me, wait a second, thinking this coronavirus may be bigger than they're letting on in the news media right now. Surprise, surprise, right? Surprise, surprise. You can't trust what they have in the headlines newspaper right now. But what does 4 legs down tell you? Anytime I see a market go 4 legs lower, I know that, there's always an exception to every rule, but most of the time, it's not going much further until we get a deep pullback, right? Usually it's 3 legs, right? In most situations, a bear market will go 3 legs down into a range. And, as of just a few moments ago, right, I thought we'd have a range down here. We're trying to sell above the range. Well, now, as you can see, right, this is the inventory report coming out, the API report, the preliminary report coming out tonight, and they're finishing this job off now 4 legs lower. This really honestly tells me, unless this thing continues to snowball overnight, I would anticipate a trading range environment down here, right? So we definitely want to be thinking, and I kind of left this wedge on here so you can just see how crazy bearish this market is right now. So bottom line at this point, right, that wedge is pretty much broken down. And usually when you see a wedge like this, just so you know, usually when a wedge comes out, it looks good at first and it breaks through. Oftentimes that wedge, whenever it breaks through that low here, you're either going to get a range down here or you're going to get a snapback, and usually it'll be a very strong reversal, right? It's almost like a what's the word? Almost an exhaustive move, right, as it goes down. So those are 2 things I'm certainly watching for with that wedge breaking through. My gut tells me, though, I don't think we're going to get people to buy this thing right now. I think people are going to wait and see what's happened to this virus. I would expect to see a range down here. So we definitely do want to be aware, right, of that potential range. Now, knowing that range is there, or knowing that we're now getting that next leg lower, let's move this battle zone down a bit, right? Let's try to move this thing down here, grab some of these legs lower, right? And this really kind of helps us to position ourselves now of where I want to be looking for my short for tomorrow, right? So all I do is take that battle zone, right? I was trying to sell higher earlier on that, but as you can see, that wasn't exactly a very useful, right, spot for it. So now I want to get up off these lows and sell. Again, I'm anticipating a bit of a range down there. What else do we know right now? We also know that I can take these lows, right, off these lows. I can bring that up at that high, right, and that's going to make for a fantastic hidden channel for me. Right? So I grab that up, right? Pop that thing up around those highs. And I realize this is not going to be your typical channel, right? This isn't how typical channels are drawn. But what I am doing, though, is I'm marking up those lows, right? I'm looking for a level of resistance now that I can sink my teeth into. So I really like that spot, right? Let's get rid of that level right there. Clean that chart up a little bit now. Give you a chance to grab a screenshot on this, right, updated version. So we know we're bearish. We're 4 legs down. Usually 4 legs means we're not going much further. Doesn't mean I'm going to buy it for sure. It's still bearish. I want to be a seller, and I want to be selling up around levels of resistance. And I can easily see this area right up here, right? Get a nice reversal line there at 56.77. This looks like a great spot here right now to be looking for some shorts. So what I want to do here is talk about, right, what my plan is to look for sell this thing tomorrow, and what to do if this thing keeps grinding lower, because you can see we're sitting here right on top of that big round number. So now I have the plan. I want to get short this market. Now, the easy way to do this would be if we get lucky, we get a profit-taking bounce. Hopefully, sellers will take their profit, right? Hopefully, we get something like that. We get a profit-taking bounce. As we bounce off of that low, the moving average slips underneath it. And this is where buyers will oftentimes come in, right? And you'll see an example of it back here, right? Where they get above the moving average, they think the market's reversed, and some poor sap, right, tries to buy that pullback, right? That's kind of the setup we're looking for here tomorrow, right? I'm anticipating that rookie traders who are trading without a plan, they're not going to have a good discipline, right? They're going to see this thing bounce hard, and they're going to say, oh my goodness, we've gone too far, right? I should get in long now on that reversal. Okay, this is a mistake that I made a lot when I was a rookie, right? I would see a major level of support. I'd see a strong bounce off that support, and I thought, okay, that means we must have reversed. The problem is we have not reversed yet. And usually what happens is the buyers, like we see back here, right? They'll come in, they'll try to buy off that pullback, and now we know exactly where their pain is, right? Now we know where their stops are. Now we know where those buyers buyers start yelling, uncle, 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 right? And I want to sell right into what I call the pain points, right? This is where the buyers get pinched, right? This is where they've either got to get out of their position, right, become a seller, or they got to buy more. And most rookies are the only ones taking those trades, right? Professionals aren't buying that pullback, right? The pros, if the pros are buying, they're down here, or they're buying way up here after we get that reversal. So I'm expecting this to be rookies trying to buy there. I'm looking to sell into those stops. I don't think there'll be enough to defend those stops there. And hopefully we can get one of those combinations here, because if we get that deep pullback, I can grab a failure pattern, right, into a pullback pattern and then sell it from there, right? So those are two setups I'm certainly watching for as we go. Another pattern, again, this would be a failure into a pullback pattern. Another pattern I'm watching right now would be a two-legged pullback, right? Now, this is always going to stand out because you'll see it's one leg, pulls back, two legs, draw that trend line. Now that trend line is important because we're going to use it as resistance. Now these types of two-legged pullback, I call them a two-legged pullback pattern, or 2LP for short. These two-legged pullback patterns, they always take longer than you think they will, right? They always seem to take longer. And the key is you want to get some daylight, right? You want to get some daylight in between the trend line and the candlesticks. That always seems to be kind of the key for a successful two-legged pullback. It goes down, then whoops, right, comes up. And just when the rookies start thinking we're reversing now, what happens? They get slapped right back down again to retest those lows. I'm going to call it a two-legged pullback pattern. Those are three setups I'm watching for here right now on a nice deep pullback. Now, that's the dream come true, right? So let's talk about what is almost more likely here, and that is we assume this doesn't continue to spook the markets, right? And the market's kind of settle in right now. Nobody's buying it. Nobody's taking much profit because, of course, this virus issue lingering out there. We got some relatively bad news, right? Economic news coming out of Europe, right? So there's a lot of reasons why this oil has a big demand problem these days. And so if we go sideways, we commit to sitting around 56, we get a range-bound market. What's the plan for a range? The plan for a range is buy low and sell high, right? I want to sell high above the range. We're bearish. I want to be a seller, and I can also be a buyer down here as well, but I have to do it carefully. And so we'll talk about, right, those two right now. So I want to sell high, right? That would be the best way to do it. The best way to sell high, I want to wait for a breakout. Usually what happens is after trying to force this thing to go lower, sellers will take some profit, right? Stops will get hit, and the market will push higher. Now remember, this is not a reversal, okay? This is just a pullback. It's a profit-taking rally. What happens now is, though, again, there are lots of rookies out there that are not going to be prepared to deal with that strong move up. They're not going to know the difference between a short-term correction and a full-blown reversal. I'm looking for those buyers to come in, commit off the pullback. Once I see them commit, again, I can sell right back down into that trading range. As you can see, when a market is this strong, I don't want to sell at the low. What I want to do is I want to wait for, inexperienced traders ultimately to kind of wrap that noose around their neck trying to call reversals. The easiest money you'll ever make is when the rookies are trying to catch the reversal and it continues to go right back with its trend. Now, again, that's the sell above that high, right? If we do go sideways here, how would I buy off the low? What's the best way to buy under the low? Same basic pattern, but instead of looking for these sellers to try and fail, I'm looking for a slightly more conservative pattern. Now, this is what I call a crown reversal pattern. And you'll notice there's a couple steps to it. First of all, right, one try for the bears, two try for the bears. Remember, the bears have control of this market right now. So if I want to be a buyer, I've got to first let those sellers exhaust themselves. Once I have them exhausted, now I can plan the entry. And where's the safest place to buy in a bear market? As low as possible, because the sellers don't want to sell low, so you've got to buy low. This is one of the key components to timing a reversal. if you buy high trying to time a reversal, you're going to use a huge stop to protect yourself. The only way to really protect yourself and time the entry properly, in my experience, right? Everyone's got their own opinion. My experience, stay patient, 1 try, 2 try, trap low, buy as low as you can go after 2 tries, and we should be able to get a pendulum swing back in the other direction. The amount of the move lower, amount of the move higher, that becomes your target on the opposite side. And then, of course, we'll see if we can keep the runner going from there. Now, what if we keep going lower, though? What if the market keeps bleeding lower? If it keeps bleeding lower, not a lot changes. Eventually, the tide will turn. Eventually, there will be some profit taking. Eventually, we will see a short covering rally. And that's, again, when I was a rookie, I would say, oh, look, there was a pivot point down here. Oh, yeah, it's the monthly pivot. Yeah, I should buy this. This happens all the time, right? We come off some random support level, right? The buyers, of course, think this is a reversal, and we're simply selling into their stops once again, right, with a buyer failure pattern up at levels of resistance. That way we can get a good risk to reward ratio for that sell going back down. But I'll bet you're wondering right now, how do you buy this market besides a reversal? What exactly would a reversal look like? Well, there are 2 types of patterns I always look for reversals. We'll talk a lot more about these in the video course, but the most important one that I like to use is the 1, 2, 3 reversal. It starts off with a profit-taking rally higher. The moving average comes over, and now those buyers, they don't fail now, right? They're successful, and we see a strong jump higher, right? The key is you don't want to try to predict that pullback, because again, if the trend is strong, a lot of times those pullbacks are going to fail, as we saw repeatedly here today. Even at the low of day today, those pullbacks failed. So you've got to wait for those buyers to really take it and send it higher. The real most important thing about a reversal, just keep in mind, reversals are all about the momentum coming off the moving average. Keep in mind, those are not buyers sending the market higher. Those are the sellers saying, here, you take it now. That's what it is, right? The buyers are not ripping this out of the hands of these sellers. The sellers are saying, okay, we're done, and they're letting the buyers, right, take it higher. That's why you've got to see that rally off the moving average. Those are the buyers now getting control. Where do we go from here? We mark up that high. I mark up the trend line off the high, and I go down to that major low and draw that trend line off the hidden channel, just like I showed you on this new channel here today, right? So now, once I have that new channel, now my sweet spot, and we're looking to buy the low of that channel, right? Now, like a lot of reversals, these patterns do take some time. You know, turning a battleship around is a good analogy for it, a good metaphor for it, right? It takes a while to turn these trends around. Don't try to jump in long too early unless you get the proper reversal. Now, there's one more possibility here, and that would be for a V bottom. You know, let's say something comes out overnight. Turns out they are contained, right? There's no problem with the virus situation. Big news in the U.S., right? We get a big rally higher. If we do see this market start ripping higher here, and what I always look for is what's happening when you see a red candle, right? We go up, red candle, right back up again, right? Up, red candle, right back up again. That's the type of personality you're looking for to know, okay, this thing's my way, right? It's ripping higher, right? So every time we see a red candle, the buyers are buying red candles. Okay, that to me is enough now to look for the more aggressive of the entry, and that's called a 2-try breakout or 2-try reversal. In this case, this is where you've got to take a bit of a broader stroke. And what you want is, right, when the market runs higher like this, you're waiting for 1 significant try, higher high, 2 significant tries. Now, my definition of significant might be a bit different than yours, but, 2 or 3 candles on the pullback. And then once we get that, now we know exactly where the counter trend stops are now at this point, and we're buying right into those stop losses. So again, it starts ripping higher, right? The buyers are buying red candles, right? 1 pullback. Higher high, 2 pullback. Again, notice how I draw this. You want these to be higher highs, 1 significant try, 2 tries, nice strong signal candle, right? We know where stops are. We're buying right into those stop losses. Now, that two-try reversal, that two-try breakout pattern is really a pattern you've got to see to really get a good grip on it. And we cover a lot of those patterns in our free trading course. So what I'll do is I'll put a link in the upper right-hand corner for you. Pause the video for me, grab that link, get registered for our free trading course. Because I'll tell you right now, part of that free course, you'll see a ton of examples of these 1, 2, 3 reversals, these two-try reversals. We'll talk about crown reversals and failure patterns. You'll love it. Everybody loves the free trading course. I know you'll love it as well. So grab that free course. It's linked up in the upper right-hand corner in the information box on YouTube. And as always, right, all of the links I talk about tonight will be in the description of this YouTube video. Let's keep going here, though. Let's keep going. How are we doing so far? You enjoying this so far? How's it going? If you're enjoying it so far, hit that thumbs up button for me. Drop me a question if you have any questions along the way. And don't forget to subscribe to the channel here so you don't miss any more of these as we do these every evening on this newsletter. How about some S&P right now? S&P is a great looking chart, but what is the plan for tomorrow? What do we know about the S&P? First thing we know is we know we're bearish. Right? We know we had a range. We know the bears went once, went twice, and rolled over, right? So we know that, right, these bears are well in control. What does a bear momentum tell me to do? It tells me to sell at resistance, right? Sell high, sell at resistance. What else do we know here right now? The trading range from yesterday. Right? That range from yesterday. Remember that range we had about 24 hours ago? Right? Here's that range from yesterday. This was the range that we had from yesterday, and now we're back into that range. Okay, and this is a big deal because remember, the pendulum swing's a big part of a trading range. First of all, what does a range tell me to do? Ranges tell me to stay out of the middle. They tell me to sell high, and they tell me to buy low. Now, obviously, with the bearish momentum, I'm a little bit hesitant to be buying low right now, not to mention the amount of the move we saw above, right? This was the coronavirus is contained euphoria, right? Again, I can't even believe that was the excuse they were saying this morning when I got to my desk and saw that rally higher. I didn't even realize that was a boon, right? Having it, anyways. I'll keep my opinions to myself right now. But that move clearly evaporated, and this is why I think, right, the markets are always right. The markets are correct, right? It's us. We're the ones that might understand why they're correct, right? But the wisdom of crowds, the markets are always right. The current price is always right? It's the way the world works. So we know as they come off that high now back into that range, that pendulum swing now puts us easily back at that 33.08, and I would be surprised if we continue this. I'd be surprised if we don't get back to that 3300 at some point before the closing bell on Friday. That, of course, is if we can keep this momentum going lower. So I see a lot of reasons, right, if we can keep going lower, to look for some aggressive shorts here as we try to go back down and retest these lows, and of course that big round number just below that pendulum swing. That range is a big clue here now, right, on this S&P. So we know we're bearish. We know we want to be a seller. We want to sell at a level of resistance, right? What else can we do here? We can look for a channel. I've got this channel drawn from these lows. Again, I realize this is not how you would typically draw a channel, but what I'm looking for is I'm looking for some levels that are up above the range that I can sink my teeth into. I really like that. Again, I call them hidden channels, right? Most folks would draw their channels like that, right? And I'm not saying that's not a good channel, but I'm just saying you're probably not going to get as good of a setup on this than if you used a wider channel. And again, I realize this does go against all the Trading for Dummies books, right? But this is what I see works best in my trading. So we know we have that hidden channel as a level of resistance. I've also got this area here at 24.25, 25.75. Line that up. That's a great spot up there for us to be able to get short above the top of that trading range. Now, we know we're bearish. The range is the big variable right now. The range is the variable. What do I mean by that? What I mean by that is the easy trade right now is going to be going back up into the right, going back above the range, get up inside this area overhead, right? Make it look like this market wants to reverse, wait for those buyers to come in, right? Trying to buy those pullbacks, and we're simply selling right into their failure. Okay, nice, easy sell. It's a buyer failure pattern, just like we talked about on the crude oil. Now, the one variable I'm watching for here, though, is do we keep going lower or do we get dragged through the mud inside this range? Because that is really going to determine where we go next as far as selling as we go lower. For example, if this market rolls over and goes lower here right now, there's a big old bullseye right on that 33.08. So if we run lower, I'm looking for that two-try trap. And I can almost guarantee you, if we get a trap going lower here overnight, right, that will probably be the most sought after entry on the way back down, right? Again, this is a simple variation of that two-try pattern we talked about earlier, right? The buyers try once, the buyers try twice. We know where their stops are. And again, we know there's a range here right now, but this clearly not impacting us. If we roll through that range, it's like, what range, right? There is no range in the mind of these sellers. So again, if we do see it continue going lower, one try for the buyers, two try for the buyers, and smack it, right? Hit it once it hits that trap high. Where's my target, right? Target is back at the 33.08. And again, I would definitely leave a runner right down to that 3,300 if you can get into that thing in the early parts of the session. Another thing I'm watching for here would be if we get another one of these guys, right, where it just runs and chops, right? If it runs and chops, now we know it's a range down here. And what do you do with a range? You buy low, you sell high. What's the best way to sell, right? It's a bear market. You want to sell high. My favorite way to sell high is to wait for, again, eventually sellers will quit trying to sell low. They'll take some profit. The market will jump up, right? That's going to have rookies thinking we're going back into the range. They'll try to buy that pullback. It always amazes me. It always amazes me. Sometimes I watch some of the setups people take here, and I'm like, I can't believe people are actually doing that right now. But then I used to do that when I was a rookie too. When I was a rookie, I used to always trade breakouts, right? But counter trend breakouts, they're almost always going to fail, right? So we know that big bear move down. I'm looking for that run up. Look for the buyers to buy the pullback. Easy short right into the sell, right into the buy stops, the sell stops, of those buyers, right? So those are two setups I'm watching for if we continue to run lower. The more difficult part is going to be if we go sideways, right? If we go sideways here, remember, this is the big range from yesterday. If we do go sideways here in the overnight, not a lot changes up top, right? We're still waiting for that short covering rally, those buyers to fail so we can sell it back down again. And again, as I mentioned earlier, I've got hundreds of examples of those very same patterns on our favorite futures markets in that free course that I mentioned before. So make sure you grab a link to that right before you guys finish up here tonight. So we know the plan if we go sideways and go higher. But if we go sideways and try to go lower, this is where we're going to have to use a little bit of discretion. So for example, let's say we go sideways here, right, overnight. We are going to sell above the high with our failure patterns, right? How do we buy underneath that low? This is where things get tricky, right? We already know the bears have momentum. It's not going to be as strong as momentum as if it was just to go through that range. So first of all, how do I buy it? Can I buy that? I can definitely buy it, but I got to buy it with that crown reversal pattern, right? Because I know that sellers are going to be hunting for this. Okay, so this is going to be a conservative pattern, but it needs to be conservative, right? You don't want to be the lone wolf out there, right? Trying to be the buyer off of that low when they're trying to finish off this pendulum swing back around 33.03, right? So if we do want to be a buyer, again, this is all based on the assumption that we go sideways for a while. That confirms the range, and then we can buy underneath the range. Okay, now that's the buy off of that low. What if we go sideways here and then make a run lower? How do I sell it going lower? One would be that strong move down, right? Now remember, right, at this point now, strong move down, right? So every time we see a green candle, the bears come in and sell it. We see a green candle, bears come in and sell it, right? That's how you know this thing is sinking, right? Every time, again, as it's going lower, right? Green candle, bears come in. Green candle, bears come in. We're watching the price action as it runs lower. If I can see that, right, then I can look for that 1, 2, And I would look for a trap high on this one, a two try breakout pattern ultimately with a trap high on this. But again, remember, it's under the assumption here that we go sideways and then really rip lower. Okay, and again, right, if we go sideways and then bleed down to those lows and then run into a range, the same thing happens here. Okay, right? Same thing as before. We're trying to sell above the top of that range. So really what it comes down to is if we go sideways here right now and then we shoot lower, right? Do we get those bears selling green candles, right? Or do we get the market to run lower, right? Come back, and then we're looking to buy below that low with that crown reversal. Does that make sense? Right? We're buying underneath the low only if it sits sideways in that range. And again, we'll know more about this in the next couple hours as this market develops. A reversal, right? A reversal. 1, 2, 3 reversal. Mark the high, mark the low. This will be one of those trades where you're going to have to get aggressive on that pullback. 1, 2, 3 reversal into hidden channel pullback. Or maybe we really run. Right? We make the run higher. Bears take, right? Bulls take profit. Bears come in, try to sell, right? Trap low off of that low. Where's my target? Back up to retest the high. Remember, you're going to want to get a trap on these whenever you are running out of open space. And we know where that high is, right? That is, in my book, running out of open space. As we run lower, the low of day is right there, right? That's the objective. So I have to get a trap, right? I've got to get a trap. If we had unlimited space down here, I would say just get the buyers trying once, trying twice, and sell right there, right? You got to get the trap. The trap is required whenever you're running out of space. And we'll talk a lot more about trap patterns inside that free course, as I mentioned earlier. So really, I want to be a seller on the S&P. The only variable I see right now is do we get this thing? Do we go back into that range? Right? That's the only curveball I see for us tomorrow on the S&P. And again, tomorrow, 8 o'clock Eastern time, and we'll do it all together. How about some Nasdaq? Right? Everyone doing well right now? Again, if you have any questions, don't forget, drop those questions in the comment section below. Hit that thumbs up if you're learning a lot here with me tonight. How about some Nasdaq? Now, Nasdaq is similar to the S&P, but there's some very big differences. One of them being we don't exactly have that big pendulum swing. The pendulum swing is there, but you know, when you see this is a pretty big pendulum swing, obviously. So, you know, it's going to be down, you know, down around what? That big round number again? Yeah, I don't think you need the pendulum swing to think about that, right? So there's your high, there's your low. So we're pretty much, if that pendulum swing is correct, right, we're right down around that 9100, right? That's a pretty big pendulum swing. Usually pendulum swings are within reason. The S&P looks a whole lot more It just looks like it's still within striking distance of a range. Right? Remember, what you got to remember is that ranges are like magnets. And so like a magnet, right? Magnets have this kind of magnetic field, right? You know what I mean, right? When you get close enough to a magnet, it draws you in. You get far enough away from the magnetic field, kind of like the atmosphere right around the planet, right? It kind of loses control. So once we get through that, right, that kind of, you know, magnetic field, it kind of breaks free of it, and you'll see they kind of created a new, right, range there. The bottom line is the S&P feels like it's still within that magnetic stream. Didn't feel as much on the Nasdaq, right? Now again, 9100, big round number, seems to be an easy objective for us, back to that big round number, but I don't think you can bank on it like you can on the S&P with that pendulum swing. The reality though is we know the bears have control. Right? We know the bears have control. They had that, you know, coronavirus contained euphoria running higher here. They gave it up this afternoon. That was pretty easy to see coming once we started to learn more about how bad it really is out there, right? Almost 500 cases reported in China, almost a dozen deaths so far. So it's not a small little sniffle. It's definitely impacting the Chinese pretty badly. And of course, my prayers go out to anybody who's being affected by that right now. I do not mean to discount the danger of it right now. I'm just simply providing my analysis of the situation. So we know we're bearish right now. I want to sell at resistance. We know that trading range is a magnet, right? So we may end up going back in and sitting in that magnet, very similar to the S&P. I want to be a seller on this. And really, what I want to try to do is sell high, right? Sell at resistance. And I'll tell you right now, there's a lot of great spots here on this Nasdaq. Look at these things stacking up. 92.11 is that reversal line. If I draw my hidden channel down here, and again, I realize this is not how a lot of folks would draw it. This is how I draw them, right? I get a bunch of resistance up overhead. You know, you might almost be able to go out and draw a trend line here and put that overhead as well, right? And then this whole area up here, you know what I mean? So you could really get, there's a lot of reasons to like that, 92.06 up to 92.20 area for selling tomorrow. We may not get that much of a pullback. This may keep bleeding lower here into the overnight session. So what's the plan here, right, for the Nasdaq? Well, obviously bears would love to get up so they can sell it back down again. Okay, if we make a run lower, the same thing applies to the S&P, right? Do we run through the move, through the range, or do we end up going sideways, right, inside that range? My go-to pattern, of course, as we get that pullback, right? I'd love to see that pullback come out. What you really want to focus on is right up there, right up around that high. I would love to see, because you can almost kind of see, right? There's your two-try trap right there. This is one of my favorite patterns, especially when the move down is very strong, right? When that move down is very strong, there are sellers just drooling over that spot, right? Now, again, we may not get it, but that would be ideal, right? Going up into that trap high, moving average comes over. Buyers now, again, are foolishly thinking this market has rebounded. It's not rebounded yet. It's not enough proof yet. We know those buyers are going to try, take a swing at that long off the EMA. We know where their stops are. We're selling into stops. We're selling the pullbacks, right, and running back down where? Back down to retest those lows. And you definitely want to leave a runner. If you got an extra bullet in the gun tomorrow, leave that runner because, again, this pendulum could swing potentially all the way back to that big round number at 91.00. So, again, it's going to be a failure pattern into a pullback pattern, just like on the oil. Keep your eyes open for a two-legged pullback. Remember, get some sunshine between those two, right, and sell it back down from there. That's the easy part, right? That's the easy part. The hard part's going to be, do we run through these lows? Right? Now, there's a couple things I'm thinking here. First of all, if we run off these highs, run lower, I'm going to adjust this channel down. I'm going to grab that high there, and I'm going to look for that sell. Again, we're not doing anything inside the range, right? It's like what range? Okay, it runs through the range here. That's the key. It's got to run through it, right? No range there. I'm looking now for that sell up at the top, right, of that channel. And again, it's got to go through the range to get there. That's one pattern I'm watching for tomorrow. Or, right, strong move down, one try, two try. Now, where's that low? Yeah, so that's the problem. The problem is if we do end up crushing it lower here, we've still got these, levels sitting right there, right? There's today's low. That's yesterday's major swing. So I'm going to have to go with a trap on that as we go, right? So as we run lower, right, remember, as it rips lower, what's happening? Sellers are selling green candles, right? Every time we see a green candle, what happens? Bears come in and crush it, right? We see a green candle, bears come in and smack it back down. That's the personality of a market that you're probably not going to get a very deep pullback, right? So in those situations, what happens is you want to make sure you get the one, the two, right? And again, for this example, I definitely want to get that trap because we are going to be right around some key support levels there, right? Now, why would I be selling at support? Because of all that darn momentum. That's why, right? So if you're wondering, wait a second, Joe, I thought we're supposed to buy at support. Well, remember, this is all the prerequisite of this is this thing just rips lower, okay? If it does that, again, you're probably not going to get that full pullback. Right? If this thing rips lower, you're not going to get that 618, 786 pullback, right? You're not going to get it. Okay? You're going to have to get aggressive with it because the market's aggressive. And again, how do you know it's aggressive? The way it moves lower. All right? And this is where joining our trade room tomorrow morning is really going to be beneficial for you so I can walk you through how to see this stuff happening as it's developing right in front of us. So those are two patterns I'm watching for here as we go lower. Again, one of them is that new hidden channel pullback, right? The other one is that 2-try trap as we go back down. Then again, right, if we do end up sitting inside of this range, so if it does end up sitting inside that trading range, right, what do? Not a lot changes for the sell side. We're still looking to sell into buyer failures above, right? But now, obviously, if we do go sideways here, now I have the option for a crown reversal to buy off of that low. Again, be patient with that crown reversal pattern, or I have to really wait patiently now to get this thing to rip lower, right? And then I can grab the 1, the 2, the trap, and go from there. Remember, if we sit inside that range for a while, this move down has to be very convincing, right? Every time we see a green candle, the bears come in and whack them back down again, right? That's the type of setup you want to see if you want to sell it as it runs lower. So some definite great opportunities for tomorrow here on the Nasdaq. I am super excited for tomorrow's trading session. How about that gold though? Let's wrap this up here on the gold. And again, same thing for the Nasdaq, 2 reversal to 1, 2, 3 reversal. Same basic idea as we talked about on the S&P. How about some gold right now? Gold's got a pretty good looking chart here right now, but like I said earlier, there's an ECB announcement tomorrow. We'll see how this gold reacts tomorrow. Usually, if everything goes as it normally does, usually gold's pretty grindy, pretty sloppy, pretty choppy on ECB announcements. So be careful tomorrow if you're starting to get a bit of a razor burn, right, from all the prickly candlesticks on gold tomorrow morning, right? If you're in Asia, if you're in Europe, right, that's definitely going to be something to keep in mind overnight. What do we know about gold right now? We know we have some bullish momentum, okay, that is for sure. Okay, we definitely momentum. What is very, very interesting, though, is they still have not been able to retest that 59.9 high. They came very close to it. Look closely there. They came close to it, but they missed it by 1 tick. So, like I mentioned last night, right, we knew there was a big move up. If you recall from last night's newsletter, right, we anticipated that hidden channel, right? You can see, again, I don't draw my channels like a lot of people do, right? And you can laugh at the channels all you want, but they really work, right? They really work. If you're watching that channel low from last night's newsletter, you're ready to go for today. So the bottom line is we know the buyers came in. They got their seller failure. It was exactly what we talked about in last night's newsletter, but they couldn't get a retest that high, right? Which is really strange. You get that strong move up, you get that beautiful pullback, that seller failure, right? Go back to retest the high. So, this just kind of looks like one of those, kind of bull triangles, right? It's got tops, right, with higher lows. Okay, think about this thing as almost like a bull triangle, right? Or a bull wedge, I would call that, right? So what do we do with a scenario like this? There are really 2 ways to do it. One of them, obviously, is to buy low, right? Buying underneath. That would be the most reliable of the scenarios. The other way to do it is to sell high. A lot of times these triangles, what will happen is they'll shoot higher, right? The buyers will bang their head against the walls a couple times and they'll collapse right back down in, right? We'll call that a nested failure. If you really want to be a hero on that, it'd be a crown reversal, trap high, right? Buyers try once, buyers try twice, trap, and go. I don't think you'll need the trap, right? A double top be great. 2 significant try for the buyers. The key, though, is if you want to be a seller on this is the triangle right here, right? You're going to want to get up into that measured move, right? Again, we're bullish. So if I want to be a seller above the top of this triangle, I've got to respect the bulls first, right? Let them take their time, 1 try, 2 try. And once I've got them trying twice, I'm going to want to stay out of this range. Okay, this is very, very important because remember, this thing gets higher. This trend line gets tighter and tighter as we go. So what I want you to keep in mind on this is if I can get a short relatively early tomorrow, I have all that space open. But if we sit and then do it here, now no. Okay, so remember, this is going to be a kind of like a ticking time bomb here. We can sell it as long as we have, first, the right pattern, right? What's the best pattern? We go up, we're going against the trend now, above the range, 1, 2, and then back down from there, right? And again, you got to make sure you've got a good amount of space here. What I always do is I measure the size of the range that I have to work with, and I make sure that my pattern can fit inside the same range. That way, worst case scenario, it's a 1-to-1, and I know there'll be enough people participating on that trade. What I don't want to do is if I have a very small little area inside and I got to take a big risk on it, that's not going to be a very attractive trade for a lot of people, and therefore you won't have that self-fulfilling prophecy kicking into gear for that short. So that's the thing I want to keep in mind, for tomorrow. As we go lower here, I think the hardest part is going to be staying out of the middle of this range. We're going to want to get underneath the range, just like we saw back here, Go into that battle zone that we talked about from last night's newsletter. I'm taking this trading range, finding my buy zones, finding my sell zones. This one, we do have that wedge on the chart here as well. And so, of course, I want to stay out of that range. I want to get underneath in the battle zone, the buy zone, get those bears coming over, and, of course, buying into seller failures here. The exact same pattern that we saw earlier this morning, The exact same stuff that we usually get underneath a trading range. So look what happened, Look what happened early move today, Same thing we're looking for here tomorrow, especially if you're in Asia or in Europe. Now, what if we go back in and sit inside the range? Not a lot changes. We're trying to buy with seller failure patterns below the range. If we sit inside this range, I will gladly here still try to sell above that high. If the range takes over, sometimes what happens is the market will be in a wedge, but then for whatever reason, it kind of sinks back in and goes sideways inside that range. If that's the case, now we can use that trend line now, and we can use that for a sell, off that trend line. Does that make sense? So if the range kind of takes it back, if the range gets back into kind of the spotlight here, if we go back into that range and sit for a while, the range takes the precedence, and we still want to buy low and sell high from there. Now, as we go higher here, what would be a way to trade going long as we go higher? The first one would obviously be a 1, 2, 3 breakout. Go through the measured move, mark up that high, mark up that low, and we're buying that pullback off of that low. It's called called a 1, 2, 3 breakout into a hidden channel pullback. The other one, I got ahead of myself there. The other one would be that 2-try trap, Strong move up, 1 try, 2 try. This will be a 2 try breakout pattern, And again, if you're wondering why do we want that trap low on this one, it's because of where we're trying to go, You always got to make sure you know where the objective is. The buyers want to get back up to retest those major highs. So if we end up ripping higher here, again, if we had all the time in the world, if we had all the space in the world, I would say, 1 try for the bears, 2 try for the bears, and buy from there. The problem with that is we're running right into resistance. What I'd rather do now, find that swing and grab that trap, This will be very similar to the S&P and the Nasdaq, If the S&P and Nasdaq dump in the first couple hours of the overnight, this pattern short will be the go-to pattern. If the gold rips, in the overnight, we know this pattern long will be a great thing to keep an eye on, here for the gold bugs in the overnight. Now, don't forget, watch out for that trading range. Be careful, Selling high up here. Make those buyers try a couple times before we sell it, and keep your eyes on buying underneath the range, with those breakout failures. Remember, there's a lot of traders out there that are not prepared mentally and technically. They're going to get roped into bad trades. You've got to keep discipline, keep a cool composure, and capitalize on those opportunities when you see them. And as always, like I always remind you guys, if you want a deeper dive into this entire trading strategy, grab the free course in the upper right-hand corner. But there's nothing better, though, than coming in and joining us every morning as an advanced member and coming out and doing the strategy with me correctly, without the stress, without all the losses, doing it with me every morning in our trade room. Anybody can watch a video on YouTube, but it's much more difficult to go out there and apply this correctly when there's money on the line. I want to see you there with me. That way you always know where the best setups are. That way you're not making those typical rookie mistakes, getting a bunch of losses and blowing your first account like almost everybody does, You don't have to do that at the beginning, Get with me tomorrow morning. Come do it with me. Look over my shoulder. I'll make sure you guys are staying out of trouble and capitalizing on the best setups. Don't forget, if you're on YouTube right now, I'll put all the links the description of the YouTube video. If you're on the blog right now, I do apologize. The blog is a bit under construction right now, but so the formatting's a bit off right now, but I'll put all the links underneath the video on the trading blog. So grab the links in the description. Go to the homepage here at schooloftrade.com to learn more, right? And don't be afraid to use that live support tool. Call that toll-free phone number, right? If you have any questions or need help getting registered overnight. And again, as always, if membership isn't quite right for you right now, definitely take the free trial, grab the free pass to the trade room, grab the free trading course to learn the strategy and see how great this 3-step strategy is that we use every morning in our trade room. But that will do it for me, guys and gals, right? Be well out there, be nice to each other, be here next time, stay safe, right? Stay safe. Hopefully this virus is contained here. Hopefully it all blows over here right before it gets too big here. But right, if it is affecting you right now, right, please be safe, right? I'll keep my thoughts and prayers overnight to be affected by this. We'll see you guys tomorrow, 8 o'clock Eastern time. If not, come back and see us again in the next edition of this nightly newsletter. My name is Joseph. As always, we'll see you guys next time. Adios, amigos. Bye-bye for now.